WeWork was once valued at $47 billion, a shining star in the startup world. It promised to revolutionize office spaces and redefine how people work. Investors poured billions into the company, believing in its rapid growth and bold vision. But behind the scenes, financial mismanagement and reckless decisions created a ticking time bomb. Adam Neumann, the charismatic founder, led the company with extravagant spending and erratic leadership. As losses mounted, WeWork's IPO collapsed, revealing its shaky foundation. Within weeks, the company's valuation plummeted, and Neumann was forced to step down. What caused this dramatic downfall, and what lessons can entrepreneurs learn? The rise and fall of WeWork is a story of ambition, greed, and the dangers of unchecked power. Like and subscribe to uncover the shocking truth behind this billion-dollar failure. 1. WeWork started with a simple idea: providing shared office spaces for freelancers and businesses. Adam Neumann and Miguel McKelvey founded the company in 2010, aiming to create a community-driven workplace. The idea took off quickly, attracting startups and major corporations alike. By 2019, WeWork had expanded globally, leasing office spaces in prime locations. The company positioned itself as a tech firm, despite primarily being in real estate. This branding helped it secure massive funding from investors like SoftBank. Its rapid growth strategy, however, relied on taking long-term leases while renting spaces short-term. This business model carried inherent risks, especially during economic downturns. Despite generating revenue, WeWork was burning cash at an unsustainable rate. Investors ignored these warning signs, dazzled by the company's seemingly unstoppable expansion. 2. Adam Neumann played a crucial role in WeWork's rise and fall. He was a visionary leader with a magnetic personality, capable of inspiring investors and employees. However, his leadership style was unpredictable, often making impulsive business decisions. Neumann focused on aggressive expansion, pushing WeWork into new markets without financial stability. He used company funds for personal expenses, including private jets and luxury properties. His vision extended beyond office spaces, launching ventures like WeLive and WeGrow. These projects failed to gain traction, draining company resources further. His unchecked power allowed reckless spending and mismanagement to thrive. Employees admired his charisma, but struggled under his unpredictable leadership. Ultimately, Neumann's erratic decision-making contributed heavily to WeWork's downfall. 3. WeWork's biggest problem was its flawed business model. The company leased office buildings for long-term contracts, but rented them out short-term. This strategy worked during times of high demand, but posed serious risks during downturns. Unlike tech companies with scalable products, WeWork had high fixed costs. If occupancy rates dropped, the company still had to pay expensive leases. Investors initially overlooked these concerns, believing in rapid expansion. However, profitability remained elusive despite billions in funding. Unlike traditional real estate firms, WeWork relied on continuous funding to survive. The moment investor confidence wavered, the company's weaknesses became impossible to ignore. 4. The biggest turning point was WeWork's failed attempt to go public. In 2019, the company filed for an IPO, revealing shocking financial details. The filings exposed massive losses, weak governance, and conflicts of interest. Investors realized that WeWork was not a profitable tech giant, but a struggling real estate company. The IPO backlash forced the company to delay its public offering indefinitely. As confidence collapsed, WeWork's valuation dropped from $47 billion to below $10 billion. This sudden downfall led to major layoffs, office closures, and leadership changes. Investors who once saw WeWork as the future of work now viewed it as a cautionary tale. 5. SoftBank played a significant role in WeWork's rise and collapse. The investment giant poured billions into the company, fueling its rapid expansion. Masayoshi Son, SoftBank CEO, believed in Neumann's vision and encouraged aggressive growth. However, this strategy overlooked WeWork's financial instability and unsustainable spending. When the IPO collapsed, SoftBank had to step in to rescue the company. It took control of WeWork, removing Neumann and restructuring operations. Despite these efforts, the damage was already done. WeWork's overvaluation and reckless expansion left it in a weakened state. SoftBank's losses from the failed investment exceeded billions, making it one of its biggest financial mistakes. 6. The culture within WeWork also contributed to its downfall. The company promoted an atmosphere of excessive spending and party-like work environments. Employees were encouraged to embrace Neumann's vision, often at the cost of financial prudence. The company's extravagant events, free-flowing alcohol, and lavish perks created an illusion of success. However, behind the scenes, workers faced long hours, high-pressure expectations, and job instability. Many employees lost faith in leadership as financial troubles surfaced. Layoffs and restructuring efforts damaged morale, leading to an exodus of talent. The company's toxic culture further accelerated its downward spiral. 7. The aftermath of WeWork's collapse had far-reaching consequences. Thousands of employees lost their jobs as the company scrambled to cut costs. Many office spaces were shut down, leaving businesses and freelancers searching for alternatives. Investors who believed in WeWork's potential suffered massive financial losses. The startup world became more cautious about investing in companies with unrealistic valuations. WeWork's failure became a lesson in corporate governance, financial discipline, and sustainable growth. Other co-working companies adjusted their strategies to avoid similar pitfalls. The once promising company became a symbol of unchecked ambition gone wrong. 8. Neumann walked away from the collapse with a massive payout. Despite his role in the company's failure, SoftBank paid him hundreds of millions to step down. This golden parachute angered employees and investors who faced financial losses. Neumann used his wealth to invest in new ventures, including a real estate startup. His ability to secure funding despite past failures raised concerns about startup culture. Many questioned why failed founders often receive second chances while employees bear the consequences. Neumann's story highlights the power of personal branding in the business world. While WeWork crumbled, he continued to thrive financially. 9. Despite its failure, WeWork's concept remains relevant. Co-working spaces continue to grow, especially in the post-pandemic world. The demand for flexible workspaces has increased as businesses embrace hybrid work models. Competitors like Regus and Industrious have adopted more sustainable approaches. WeWork itself survived under new leadership, although at a fraction of its former glory. The company's restructuring efforts focused on profitability rather than reckless expansion. While its early execution was flawed, the core idea of shared office spaces remains valuable. WeWork's downfall was not due to a bad concept, but poor management and financial decisions. 10. Entrepreneurs can learn several key lessons from WeWork's rise and fall. First, rapid expansion without financial stability can lead to disaster. A strong business model is more important than hype and branding. Leadership matters, and unchecked power can destroy even the most promising companies. Transparency with investors and employees builds long-term trust and stability. The importance of sustainable growth cannot be ignored, especially in high-risk industries. WeWork's story serves as a reminder that billion-dollar valuations do not guarantee success. The startup world must prioritize responsible leadership, financial discipline, and long-term strategy. WeWork's downfall is one of the biggest business failures in recent history. It serves as a cautionary tale for entrepreneurs, investors, and the corporate world. The company's ambitious vision was overshadowed by financial mismanagement and reckless leadership. While co-working remains a thriving industry, WeWork's collapse changed how investors evaluate startups. Understanding what went wrong can help future businesses avoid the same mistakes. The rise and fall of WeWork is a reminder that success requires more than just vision. It needs smart execution. Like and subscribe for more deep dives into business failures and financial lessons.